Okay. It's been an interesting week to say the least. I mean, we had a lot of movement happening and very good moves happening over the last week. We had some magnificent trades to say the least. Specifically, if you're looking at the euro pairs and if you're looking at the dollar, if you will, just to give you like a quick example of the situation that we have based on what the trades that we picked up last week. So you can see that we all the trades so far being short the pound from the structure point of the pound CAD from the structure point of 160. We did also the pound Swiss from last week. The short point was the 133. We did the pound yen from being short from the 128.90. We had some things changed. We also had the Aussie Swiss to take it short. We had the Aussie yen short. We had the Aussie dollar short from the 107. Plus we had the moves, all the moves that took place in the euro. The one thing that I want you to keep in mind when we set up these price points is if we had a buy point, a structural short, let's say a structural long as a buy point, and this buy point has been triggered and you go long, and then after you go long and you get into the money, for some reason the prices come back below that price point, then your buy signal is automatically converted and it's flipped to become a sell signal, and the vice versa. So if I had, for example, my euro dollar, my structure short, and my short point is 142.16, and then it's trading below the 142.16 and you're making money, and then for whatever reason after a day or 2 or 5 days it comes back above the 142.16, that now becomes a buy signal, automatically becomes a buy signal. And in reality, if you could see this radar screen, if you would have taken these buys and sells, you would have actually doubled your return, because you would have had it on the right side of the market going short in the first place, and then you would have covered reverse and you could have gone long. Okay, so let's start by doing the indices like we always do, so that we can identify now the how the currencies are going. And Janet, please, there is a gentleman, I don't know, somebody's just coming in identifying himself as I with the password. Whoever you are, please put your name, okay? Or you leave the room. Just kick him out. I'm sorry, you're welcome to come in with your name. If not, then out. We have the turtles here. I'm not going to have anybody to play around. Okay, so we know we had some big movements in the dollar, and again the dollar had, remember from last week we were talking about actually starting to buy the dollar when it came back above. I mean, this was the plan as of last week. This was the close we had, and if it gets above the if it gets above if it gets above the 75, let's say 50, which is the 75.49, then we were expecting a move up to the structure point, which is the 76. And then of course if it breaks above the 76, you're looking for a move to the big structure point, which, like I told you last week, if we do go above the 76.95, then we are looking for a trend change in the dollar, because this is a major structure point, and we should see the dollar actually start an uptrend. This is how strong the 76.95 is, and therefore we should have an expectation that if it goes above the 76.95, we should expect that US dollar to explode to the upside. Then fine, enter your name as Thomas Proziski. That's all what it is. You are very welcome, sir, in the room. Just please enter your name. Nobody comes here with nicknames. That's all. So we are looking now for an expectation for the move above here, and this is what happened. We had a break literally above the 76.95, which is, again, as I told you a minute ago, if it goes above the 76.95, we're expecting a blow up to the upside. And you guys, the turtles, this is what we were discussing yesterday about the 47.23. If it gets above the 47.23, because this is such a structure point, we expect an explosion. In this case, we did not get the explosion. Therefore, that immediately is flipped and it becomes a sell signal. And therefore you would take the sell, again short, from the 76.95 to short the US dollar, i.e. go long the British pound, go long the other crosses. Yes, it is a failure trade, and just keep your names to yourself, Sergey, please. And then now it turns around and we have now a big short that you can take it short, and that is your continuation. Yes, it is a failure trade, and you're looking now that you see it came back below the 75.94, which again would, you have the expectation of the capitulation you got, and then it broke below the 75.49, and now you're expecting further capitulation to the downside. You're expecting it to crash. You did have the crash. It take you all the way down to 74.90. It moved 100 basis points. It moved 100 basis points. So you were paid on that break below 75.49, and then we're expecting it now to resume its downtrend, and this would be our initial point, that, or the previous momentum low that we expect this thing to go down to. But when you see a bar like this, that it actually broke down, this was red. When this thing started, it was a red candle. It was going all the way down. I mean, it opened right here. I mean, this thing just gapped down, and so this was absolutely red. This means that this bar, even though the low is 75, it just now have turned back around, and it's another failure trade, Sergey. Okay, because you had no continuation, rather the market flipped around, and now it's back above your structure point of 75.49, and this was Friday. That Friday it has closed at the 75.52, which means it is above the structure point of 75.49, and you can see that day itself it has traded on the either side of the structure point of 75.49. So it broke above it, it did not go higher. It broke below it, it did not go lower. And then towards the end of the day, it closed above the structure point. So is this a buy signal or a sell signal? Sergey, you're quick. Buy signal or sell signal? Exactly, it's a buy signal now. So now I'm looking to be a buyer of the dollar. Absolutely. In a way, rather, it is neutral, but it's on the positive side. So you're not going. You need a signal to go short. Let's put it this way, rather. I need a signal to go short, but my bias now is neutral to long. Okay, your bias is neutral to long. Okay, and if it breaks below, and you need a signal before you go short. So you don't really particularly need a signal to go long because you're either neutral or long, but you need a signal to go short. Okay? So therefore we consider that as a positive rather than a negative. So that is the dollar. If we look at the other major currencies, let's look at the euro, which is the other one in play. Again, this was another brilliant setup from last week. This was Monday. We had our sell. We have agreed that we're going to sell it below the 142. This is the index, but on the cash, the spot cash is the 142.16. That was the number. This is what it closed, and we were taking it short below the 142.16. So we had a sell from 142.16, taking us all the way down to the 138. But what you would see, guys, is that it came back and exactly pretty much like the US dollar index that I showed you. Okay, leave Thomas. Thomas, you're welcome, Mr. Thomas. Just Janet, it's okay, Janet. Janet, it's okay. Leave Mr. Thomas in. It's okay, it's fine. We'll show you later on in the break, Thomas. Thank you. We welcome you here. Happy to have you, sir. So now, as you see, it came back and it closed above the structure point, same as the US dollar. Same as this, and same as this close. Therefore, you would see that the reaction in the euro, after it did that, you got the move to the upside, and this is the strength of these structure points, is you would see that they act as the stopping point, not just your vanilla so-called support and resistance. We're not picking. These are structure points or prior turning points, and you see once it came back, the market turned, it snapped back immediately to the second structure point, and the same setup over here that I explained to you in the beginning of the session. If it goes above that structure point and then it turns back around it, exactly like the dollar index, therefore you now had a sell signal from 142.17, 142.47, and now we close the week on the index at 141. So we are already, this sell signal is still intact. So I have theoretically a neutral to buy signal on the US dollar, but I do have a bear or a sell signal already in existence for the euro. So the euro is a sell, the dollar is neutral to buy. Okay? If we take the other weak currency, which is the British pound, the British pound, this was the reaction to the dollar index, and you can see that once the dollar flipped on the index, we had this big move on the British pound. This is kind of a neutral. It's neither, I think this is more towards a buy, if you will, or more than it is a sell when it comes to the British pound, because it has reversed back above the structure point of 159.40. On the spot cash, it's the 159.80. Okay, and this is the one that we were trading from the from the structure point, which is the 159.80. That is the pound dollar. This is the short point was the 159.80. You see that? And it was also the structure point. So when it trades below the 159.80 and then it turns around and it comes back above the 159.80, that now becomes your buy signal. So you're immediately long now from 159.80, and it is now trading at 161.22. So you're up 140 pips on that trade, even though we took it short at the beginning of the week. Okay, so in this case, for the British pound, it is actually coming up from a structural point. It was a sell signal that has been now reversed into a buy signal. Therefore, we're more inclined to be looking at it as in a positive light than in a negative light, but it is a neutral. So in this case, it is neutral to a buy, because this Friday, this day on Friday, is actually a buy signal in itself. On its own right, it is a buy signal. That's why I had it highlighted in an ellipse before. It is a buy signal. So I'm looking to be a buyer of the pound. The only thing I have with this is, if you look at the high of this day, is 160.10, 161.10. The close of the week is 161.10. So even though we had a buy signal, i.e. the market sold off and it then turned back and it was right there closing above the 161.10, but it is such a weak buy. They were unable to actually close it above the 161.10. The 61.10 is just like your breaking point. I mean, if it closed at 161.12, I would say, okay, that's a clear outright buy. But sitting there right at the one, it's like touching the ceiling but didn't go up to the next floor. It's stuck to the ceiling, but it didn't go through the ceiling. So we will still use it as a positive, but again, we're going to use a grain of salt with it. We use it with a grain of salt. Okay? Now, here comes the interesting pairs. If you look at the Japanese yen, we're pretty much in an uptrend. It's a buy. It is quite strong, and we had the cell and then it came here, so it's okay, and it's pretty tight, so we can identify a good buy signal and a good sell signal in a, with a very low risk parameter, but our bias is to the upside, and of course we will be able to identify a sell signal. This is the Swiss franc. This is a magnificent, absolutely magnificent, powerful chart. The all-time historical high for the Swiss franc is the 123.18, and it closed 123.72, and it closed at, let's say, about 122.90, 123. So we're just about 60 pips away from the all-time high, which is, I mean, that's all what you want. So we know that the Swiss is a safe haven. So we're going to keep an eye on the other safe haven to see how things going. If you look at the gold, again, 159, 1,590, all-time high. So that confirms the Swiss franc. All-time high on gold, pretty much all-time high on the Swiss franc. So that is beautiful. What does that mean? It means that the Canadian should be as strong because it's a commodity currency, and the Australian should also resemble the gold chart. So my expectation when I'm going now to look at these charts, I'm looking, and my expectation is to be a buyer of the gold and the buyer of the Australian dollar, and the same as a buyer of the Canadian. So if I put the Australian dollar, look at that. The Aussie is not moving in the same direction as the gold is not moving in the same direction as the Canadian. On the contrary, this thing is selling off, and that is a big sell-off, because the sell signal, that red line, always represents our sell signal. Selling below 160, 106.30 was the sell, to close the week at 105.40. That's about 100 points. Think about it. This should have closed near the all-time high if it is actually confirming that moving gold. Look at this. This is your producer of gold, and this is what's doing. So what that tells us, what? That as of now, based on all the currencies that we have been looking at, this one is the weakest. Because even though it has every reason to be strong, based on the gold, based upon the negativity of the dollar, based upon, I mean, we had a big reversal in the dollar, based upon the uncertainty, then this baby, based on all that good news, this thing is going flat to down. Therefore, the Aussie is our weakest currency, and that will be the one I am looking primarily to be a seller of. Last but not least is the Canadian. And look at this. You see that the CAD is actually still moving up. Yes, it's not really a strength that, you know, it's something that you want to write home about, but it is actually moving in the same direction as gold. It is moving in the same direction as the other precious metal, which is the silver. Look at the silver, and look at copper, all the metals are going up, and the CAD is going up. With all that good news, with all that demand, the Aussie is going down. So if we have any stall, anything that pauses, so you're getting a lot of demand for the Australian currency, yet all this demand is met by selling, so that's a big sign of weakness. So if any of these precious metals weaken the coming week, then you can expect the Aussie to capitulate at least to the next structural point, which is the 102. So the way we are going now to set up our hierarchy, so we're looking at selling the Aussie, number one, and we probably going to be looking at buying the CAD. All right, we can be looking at buying the dollar. We can look at also buying the Swiss against it. We can look at buying. You can buy, I mean, with this kind of weakness that you see on the chart, you can basically buy anything, but primarily we're going to focus on these two, and then you can be looking at maybe the euros, Aussie. So you're going short the euro Aussie, you're going short the Aussie the dollar, you're going short the Aussie CAD, you're going short the Aussie Swiss. So primarily we're going short, and the selection is we're going to be starting with buying short CAD, short Swiss, short short dollar, short euro, and then with that you can also look at maybe a euro dollar Swiss, going long the dollar and short the euro. And as far as the yen goes, you might also want to buy the yen versus the Aussie. So our feature currency, if you will, of this week is the Aussie, and the feature direction is to the short side. And then we're going to do our other pairs. The dollar and the yen are kind of neutral. The euro dollar are both, the euro and the dollar both are weak, so but the strength is leaning towards the US dollar. And we're going to see on the individual, the dollar Swiss, the dollar CAD, and the dollar pound. The pound is also a buy. Okay, so we have also the pound as a short-term buy, but it's a weak buy because, as I said, it closed at the 161.10 without really being able to push above it. Look at this, that is the close at 61.10. That is a mediocre buy, so we're just gonna be neutral at it. Okay, so the hierarchy again is going to be, we're going to be sellers primarily looking at selling the Australian dollar, and therefore your bias for the week is actually the weakness. If you see gold coming down, this means the Aussie is coming down, and so forth. If you see silver is coming down, then the Aussie is coming down. And if we see them going up, then you also by definition know that the Aussie is not going up, because with all this move up, with gold closing at all-time high, this thing is selling off. So you're looking at the Swiss as a buy, you're looking at the Canadian as a buy, and you're looking at the Japanese yen also as a weak buy. Okay, these are the indexes. So let me save the recording.